high tensions in financial markets. During the Chinese holiday week, employment data from the US Central Bank's meeting in New Zealand and Australia and purchasing manager index numbers from the most developed economies can increase the volatility level of the week. At the same time, with ongoing tensions in the energy sector, especially in Europe, we will have the OPEC meeting as well. European energy ministers approved €100 billion to limit the impact of the gas crisis, as explosions in the Nord Stream 1 destroyed all hopes to have the Russian gas at any time soon. Let's review the most important events and data in the week ahead with me, Ahura, and FC Markets. Number 1. US ISM Manufacturing and Non-Manufacturing Index. As a possibility of severe recession increase, some economic data gets more important, especially ISM numbers. Monday we will have the manufacturing data, and Wednesday service sector will be in focus. Manufacturing PMI is used to get weaker in the past months, but numbers in the service sector still have no sign of weakening. Just to remember, prior to 2001 and 2008-2009 recession, the ISM service sector used to increase, but then suddenly fell below the K50 level and confirmed the recession. Both manufacturing and non-manufacturing numbers are supposed to be above 50 and increase the pressures on Fed to have more hawkish policies, which would be negative for the stock markets. Number 2. Reserve Bank of Australia. We expect caution decisions and maximum of 25 basis point rate hike by RBA on Tuesday. In September, RBA raised the rates by 50 basis points, and with this 25 basis point expected action, the central bank in Australia will raise the cash rate to 2.60%, which could indicate that they believe monetary policy is close to natural and any further moves could be seen as moving towards restrictive territories and bring the economy into crisis. These expected less hawkish decisions can put more pressure on Australian dollar against its crosses. Number 3. Reserve Bank of New Zealand. After a 50 basis point rate hike in August meeting, now we expect the central bank to hike rates by 50 basis points to 3.50%. Unlike Australia, despite high inflation, economic data, especially labor market data, are still fine and increasing. So, RBNZ will have room to increase rates. Updated forecasts show that RBNZ expected that policy rate to peak at 4.1% in the second quarter of 2023 before declining in 2024. These data are supposed to help the kiwi against its crosses. Number 4. OPEC meeting. The 45th meeting of the Joint Ministerial Monetary Committee, called JMMC, and the 33rd OPEC and non-OPEC ministerial meeting will be held in person at the OPEC Secretariat in Vienna on Wednesday, October 5, which will be the first in-person ministerial meeting since March 2020. Analysts are expecting a 1 million output count plan, which can increase the oil prices. And finally, number 5, US employment report. The labor market in the US continues to be the strongest part of the US economy by reducing unemployment insurance applications below 200K, while non-farm payroll rose by 315K last month. For the context, non-farm payrolls increased by an average of 167K per month in 2010. However, a 250K September non-farm payroll increase estimates after gains of 315K in August, 526K in July, and 293K in June should also show some signs of weakening in this sector. It will be difficult to predict the market reaction. However, better than expected numbers will be a negative for the stock markets and vice versa. Thanks for watching this video and hope it's going to be an amazing week for all of you.